Thinking about switching to an S-Corp is not just about saving on self-employment tax. In this episode, we break down the real pros and cons like payroll requirements, compliance traps, and when the IRS starts paying closer attention. You'll learn who actually benefits from an S-Corp election, why reasonable compensation isn't just a buzzword, and what to expect come tax time. Hint, there's a little bit more paperwork involved. And also, we're going to talk about some common mistakes that get S-Corps in trouble. Before you file the 2553, hit play. This isn't a one-size-fits-all, and we'll help you figure out if it fits for you. Welcome to this week's episode of the Unfiltered Profit Podcast. Caitlynn and I are here to talk about an S-Corp election, when it makes sense, when it's just a bad idea. There's a lot of misconception out there around this, and we're excited to kind of pull it all apart for you.
Because this is very tax specific, but I think even in the accounting groups we're in, we're seeing discussions around these and whether businesses got opted in too early or unnecessarily, whether they were a little maybe even predatory by tax firms and accounting firms to push people into. So I think there's a lot around this, not only like the technical side, but like it felt a little like the coaches kind of influenced the tax and accounting sphere here. But yeah, it's been interesting.
Yeah, so let's first define this for people. So what we're talking about specifically here is when you are set up as an LLC. You have the ability to either be taxed as a sole proprietor, which is the normal way that it is set up, or you can make an election to be taxed as a corporation. And that corporation can either be a C Corp or an S Corp. And what we're seeing a lot is that businesses are being elected into this S-Corp election, which we'll talk about the pros of it, but that all of a sudden means that you are treated like a corporation. So you have a separate tax return and different things there. And sometimes businesses just aren't ready for it.
Yeah. Oh, without a doubt. You'll find anyone who's like, hey, you're going to save the magic numbers, 15.3% on taxes if you make this election. And then it's all the details are just failed to be given to you. And it can be super beneficial to be a corporation. I mean, we're an S Corp. It made sense for what we are doing. A C Corp, which is its own entity, can make sense for what you're doing. But it's also okay to like pay the extra taxes and stay a sole proprietorship. So yeah, so the S Corp is purely a tax election, which I think is important to note that there's no legal piece of this. And some states actually require, so you can file it with the federal government, you have to, but you might also have to file with your state, the equivalent of the 2553. I want to say like New Jersey and New York pop up as common ones that have their own. Right, makes sense. Extra documentation. And the idea being, so the tax piece is that when you are a sole proprietorship, you are taxed Social Security and Medicare on all of your profits up to the limits on Social Security. There's not a limit on Medicare. Whereas in an S-Corp, you can give yourself a reasonable compensation, pay yourself payroll, and the rest above and beyond reasonable comp then gets taxed just for income tax purposes. So that's where like those tax savings come in.
Yeah. And so let's define that 15% that people always throw around. We break that down really clear. Like, what is that?
Yes. So that is the employee and employer portion of Social Security, which is 6.2%, and Medicare, which is 1.65. If I remember, I know because it's 7.65 total, so it's 1.45 because 6.2 plus the 1.45, so 7.65% employee. So if you've ever had a paycheck, if you've ever watched Friends and Rachel's like, who is FICA? That is FICA. Employer and employee both pay into the system. Social Security does have like a wage cap. Anything above and beyond, you don't actually pay that 6.2% on, and then Medicare goes forever. So that is where that benefit is from, is that you don't have to pay it if you're deeming the rest not reasonable compensation.
So the companies that really benefit from making an S-Corp election are at a point where their business profit is pretty high, higher than what they would be required to pay themselves for reasonable compensation, which we'll talk a little bit more about that. And I think one of the areas where we start to have this question as CPAs looking at new client tax returns is when a client comes to us and their prior accountant has made an S-Corp election, and we look and we see they have never been profitable. The business has never turned a profit, or it has turned an incredibly low profit that is lower than what their reasonable compensation would be. There's literally no benefit to this company other than, I don't know, there's no benefit at all, right?
I don't either, right? Because the tax savings are great. When I analyze a company, when you analyze a company, what we look for is the tax savings and then the additional costs, because now you're a corporation. So on your tax return, while not necessarily obligated to show your balance sheet, you should be filling out a balance sheet. And if you can't afford bookkeeping, then you have to do the balance sheet. And the majority of business owners are going to look at either of us when we say, hey, where's your balance sheet? And be like, what are you talking about? Like, I don't have one of those. Why would I keep one of those? So if you're not making a lot of money, like you're not paying for bookkeeping most likely. And that is such a huge expense in many ways to having an S-Corp that no tax preparer seems to like let business owners know, like, hey, that's great. Like I can save you this, but you still have these additional obligations, bookkeeping, an extra tax return, potential state issues, like those cost money. And so when you're making that decision, we need to weigh those out. But yeah, when I get someone whose profit is 20, 40, $1,000, like, yeah, you saved that first year you made that election. Most likely that's why it got made, because you hadn't paid in enough estimated taxes and the preparer is trying to help you out. But you've kind of committed yourself to running your business differently than you had been.
Yeah. And I do think that there are some circumstances where it's like the preparer might not have really known that there wasn't a benefit to making that S election. I'm at least going to give them the benefit of the doubt, because otherwise the predatory piece is that they just wanted to be able to file an extra return and get that extra revenue. And now the business has fallen for their scheme, essentially.
They have. I've seen folks out there upwards of $10,000 to file an S-Corp election for you, just to file the S-Corp, to do the reasonable comp analysis. They'll charge upwards of $10,000. And so then you layer that in and you're probably going to just pay $10,000 for something for the business that would have been more beneficial. So that's a big one. S-Corps, some downsides to them that I think we should talk about in terms of sole proprietorship. So when a lot of people like to hire their kids into their business, right? When you're an S-Corp, that's now become more expensive. You have to do actual payroll and FICA on them. When you're a Schedule C and your kids are under 18, you don't have to do that piece. You can get away with not paying the Social Security and the Medicare. And for a 10, 11, 12-year-old, like who can come and clean the office, that's actually nice that you're not having to worry about those payroll tax pieces. You have above the line health insurance deduction as a Schedule C. You can hire your spouse and set up like HRAs as a Schedule C, which would be a sole proprietorship. All of those, unfortunately, change when you become an S-Corp. We have to add them to your box one of wages. Your spouse is no longer necessarily eligible for those same benefits, or they become taxable benefits. It's not just a 1-year decision. It's really a 5, 10-year, what do you want to do with this business decision?
Yeah, that's such a good point. I think those pieces are just being completely missed when all we're paying attention is to that 15%.
Mm-hmm. Which is just so easy to like have come off the top. So we talked about reasonable compensation. So how would you define it as a non-tax person?
Yeah, love that. So the way I always explain it to clients is, let's take all of the hats you wear in your business. You know, as a business owner, we do wear many, many hats. And so we're doing admin work. We're doing what our actual professional job title is. We're the business owner. We're all those roles. And you factor in how much time you spend in each role, apply a reasonable salary to a reasonable hourly rate, however that breakdown comes out. And then that kind of gives you an idea of like what your salary should be per year. And we apply that to what you should be paying yourself. And then the rest can come out as distributions.
Yeah. And the reasonableness is important from the tax side. We've seen this go to court time and time again. We've had CPAs who have gone to court to try to defend their reasonable comp that has not been reasonable. It's been far too low. So when you're too low, you catch the attention of the IRS and they kind of come in and they're like, hey, you couldn't pay somebody this wage to get them to do this job. You can't live on this wage. So how can you tell us that it's reasonable? The other piece from the tax side I look at is, if you're so low that you're not paying in enough in Social Security, you're going to pay for that when you retire, because our Social Securities are based on a high 10 calculation. And so we're looking at our past wages. And so if you've historically not paid in and you haven't purposefully invested into a retirement fund, you're going to be sad when you retire and your benefits aren't there.
Yes. And this is not as clean cut as like people like to be like, oh, what does it have to be? 30,000, 50,000. Like there's just some magic number that either you have to pay or some magic number that the IRS doesn't come ping you. And neither of those things are true. It would be nice if it was just some like, oh, business owners must pay themselves $50,000, you know, but if there was some flat rate, it would be incredibly high. So whenever people make any sort of flat rate argument to me, I'm like, okay, fine. Like, here's what the flat rate is. Are you happy? And they're like, no, well, absolutely not. Like, if we made it flat rate, there's nothing that says it's going to be low.
Right.
So,
And you always have to go from like the IRS wants their money. So when they're building their case, they're looking for like, hey, like pony up, the government wants you to pay these taxes. So those are important things to keep in mind. We mentioned what you need to expect during tax time, and that would be clean bookkeeping. Because when we start talking about reporting a balance sheet, the word, like the balance word matters, that we need the assets and the liabilities to be equal. And so often if the S-Corp isn't making enough, then accounting's not happening and bookkeeping's not happening. So we don't have a clean balance sheet, which can be complicated when you go to sell your business, when you grow to the point of like being required to report that on your tax return. So when making that election, you really need that thought process of like, hey, how to do a balance sheet, which means I probably need to hire out this work. And is it worth that cost?
yeah, it's funny because we talk about an S-Corp election as being a totally like tax focused thing, but you have to be ready operationally to make that decision. Because if you've been kind of like running as a side hustle where things aren't clean and you just kind of like wing it at year end, you make an S election and all of that is gone. You've got to treat things legitimately. You've got to have legitimate bookkeeping, or should you get audited, you're in a world of trouble.
You really are. And then payroll is the other piece I think people forget about. Like you now have to run payroll, and that's a federal and state issue. Those are reports that have to be filed. Even if there's zero reports, it's taxes that have to be paid in throughout the year. And you'll get a mix of accountants who say, hey, we can just do all of that at year end in December. But then you have to be purposeful about having that cash ready to run that tax payroll in December. Whereas I'd say the majority of the time we would advise somebody to do it monthly. So now you need a payroll software or a payroll person to come in and do that work for you. So it's just not as easy as filing this form that I think the misconception exists for.
Yes. And recently have worked with a client who made the S-Corp election in a year. And I think this is important to note no matter who you're working with. If you're like, okay, like I am going to make an S-Corp election. So she made the S-Corp election and we know it's for a full year, right? It doesn't matter when you start payroll. Like the government views it as like, well, it was 2025, you made the election. You need your payroll forms in for the whole year. And what happened for her was she made the S election. She started payroll in the fourth quarter, and her payroll provider was supposed to be filing her payroll reports. We'll get to the point where that didn't happen. But even so, they had only planned on filing the payroll report for that fourth quarter. Like if you were using a payroll software, you'd have to make sure that like, hey, are you guys going to go back and file Q1, 2, and 3? They were zeros. There was no payroll run, but the IRS is looking for that.
Yeah.
And so this client actually got a notice, said, hey, in 2008, we're almost 20 years away from 2008 at this moment. So the fact that the IRS even, I don't know what they were digging for, but they were just like, you never filed your quarterly payroll reports from 2008. And so we're having to go and file those zero reports to be like, yes, there was nothing that happened. And we're having to handle that fourth quarter too, because the payroll company either filed and it got lost or who knows, it was 20 years ago almost. But you do have to make sure that everything is being handled for the full year, even if that decision is being made later in the year or with your tax filing or whatever that looks like.
Yeah. It's just kind of this domino effect of like, hey, I want to make this one election. And then, well, you have to do this and this and this and this. And so there has to be education, and you as a business owner have to be curious. I've had a lot of clients come to me saying, hey, my accountant just made this S-Corp election, and I want to give benefit of the doubt to both sides. Like I have no doubt that they said, hey, this is like the best thing to save you money. You don't have enough like money to pay the taxes right now. So let's make this election. But you as a business owner also have to be like, okay, so what does that mean? That means I have to run payroll. That means I need reasonable comp. It means I have an extra tax return. You need bookkeeping. My distributions look different than my payroll. Like you as the business owner have to get a little curious on like, hey, How do I treat this appropriately? Asking questions like, what deductions am I going to lose or gain by making this election? How do I handle them? One of the biggest, I want to say, is the home office. As a Schedule C, it's super easy at the end of the year to go and toss your utilities in and your depreciation and get your home office deduction. But as an S-Corp, you actually need to put into place an accountable plan and reimburse regularly and within 30 days of the receipts. Like, there's just more rules because you're now a corporation and the IRS treats you differently.
So I'd like to summarize, what are the additional costs that come with being an S-Corp? And we don't have to give dollar amounts, but I just want people to know, like, here's your list of what you're going to be paying for if you make the S-Corp election. And let's start at the cost of the election itself.
Right. So you're going to have the cost of the election, whether it's late or on time, probably is going to make a difference. You're going to have the cost of your bookkeeping. You're going to have the cost of your 1120S, which is a new tax return. You're going to have the cost of your payroll filings for the year or whatever works out that way. And then you're going to have like the cost of both time and money on the additional paperwork and documentation that you need in order to represent yourself as a corporation and obtain the deductions that you want. And likely some consulting. If you don't have like an ongoing relationship with an accountant, you're probably going to want to pay for some consulting time on how to treat this the right way.
Yep. And if you opt for payroll software, then you'll also have that cost.
And most of those these days are an ongoing monthly subscription, which is great. But most of them, I'd say, have done away with like any quarterly or yearly fees that used to exist.
Yeah, for the most part. I know we still have a little bit of option there, but overall, they want you on a monthly basis.
They really do.
Everybody does.
Yeah, without a doubt. So again, S-Corp's super beneficial, can really help the QBI deduction, but there's a lot out there these days. I think that you need to take the time and effort to look through it, talk to somebody, make sure it makes sense for you. And if you're in an S-Corp, I want to throw that out there. If you're in an S-Corp and you're like, this doesn't make sense anymore for me, you can revoke that election. You cannot opt that LLC back into an S-Corp for 5 years. So it is a long-term decision. But if you've reached the point that all of those costs to maintain it outweigh the benefits, it's worth a discussion with an accountant, and we'd be happy to talk.
Yeah. So whether you're at the point where you are an S-Corp and you don't know if you should stay there, or if you are an LLC and you're thinking maybe I should make this election, we would be happy to consult with you through that process, or reach out to us. We have an inquiry form on our website where you can fill in more information about your business, and we will reach out and schedule a session with you. But we would love to guide you in that process. It's not as clean cut as people like to make it seem. Please don't just read one article online and say, yeah, that makes sense. I'll save 15% in taxes. It's not that simple. You've got to do it right. And it's okay to just say, that's too complicated for me. My business is just not that. No harm, no foul there.
None at all. Thank you so much for listening today, and we look forward to meeting you on the next episode.